everybody. I'm Mike Vizard, and today we're talking about IT budgets for 2025. Then we're going to have a little chat about, just how much AI is there in the enterprise these days. And finally, we're going to be talking about why a lot of organizations want their data back from those SaaS applications. You're watching Techstrong Gang. Hello, everybody. I'm Mike Vizard, and today I am in the IT conference capital of the universe, otherwise known as Las Vegas. And joining me today is Guy Currier, who is at home, I think. Guy, is that correct?
No, I'm in the office.
You're in the office. All right. But the office is in Austin, Texas, correct?
That's right.
Awesome. And then, of course, we have John Willis, who is joining us once again from, I think, your home as well. Is this a rare moment?
Auburn, Alabama.
All right. And then finally, we have Mr. Stephen Foskett, who joins us as well from his perch over at the Futurum Group. Stephen, how are you?
Excellent. It's good to be here in beautiful Hudson, Ohio.
All right. Let's get started. There is the first in what will undoubtedly be a series of reports about projected spending for IT in 2025. This first one, at least that I've seen, comes out of Forrester. And it seems to suggest that things will be steady because there will be an increase in spending, but it's on par with inflation, so people don't seem to be expecting a huge uptake. But Guy, what's your sense of what's going on with budgets for 2025? It's at the moment, there's a lot of people trying to figure out this conversation. I think CIOs are having these meetings right now.
Yeah, this is a fascinating report, Mike. You and I have been watching these kinds of reports for many years, and I think we're seeing a real shift away from the cost control conversation. I mean, if you remember, cloud was originally pitched as a way to save money. If you think about all of the sort of waves of, technological innovation, these big waves, internet, cloud, et cetera. What this reminds me of most actually is the PC revolution of the 80s, because AI, just like the PCs back then, when people look at it, just average, ordinary people look at it and look at its effect, they are immediately struck by its potential for value. And so the support towards greater spending really, to me, parallels what happened in PCs. If you remember, for years and years, PCs were bought and used, and the economists were sitting there going, well, we're not really seeing any productivity change. We don't really understand, but people kept buying them and buying them, right? And I think in the same way right now, the potential benefits of AI are so obvious that there is a lot of tailwinds for CIOs, CTOs to increase their budgets and spend. At the same time, they are modernizing. That was something highlighted in the report. Budgets for modernizing and talent to take advantage of AI, to modernize better, to take advantage of cloud, to transform applications. Talent cost is going up. I'm actually I think Forrester and maybe some of the other research firms just don't want to go out and talk about increasing IT budgets because they've been talking about IT budget control for so long. But I think there's a real potential upside next year simply because there is such business priority towards adopting AI, even when it's uncertain what the actual immediate return on that investment is going to be.
Stephen, let me ask you this, because part of my soul says, well, this is interesting, but the CIO doesn't control all the IT spending these days. There's just a boatload of it that exists outside of their control in the various business units. And I think sometimes if you add up all the spending in the business units, it's probably more than what the CIO is spending on IT budgets these days. But is the actual amount of money being spent almost, nearly double maybe what the analysts are thinking when they only ask CIOs?
Oh, I absolutely think that the cat's out of the bag in terms of spending on AI. That dark spending that IT organizations have been dealing with forever. It does remind me of, as Guy pointed out, the PC revolution, where essentially the IT organization was trying to get their hands around it and figure out how to make it productive and how to make it corporate and everything. Meanwhile, everybody in the sales department was going out and buying a PC on their own, putting it on their own desk, buying their own software, running things. It's the same thing with SaaS, as of course John saw for the last 20 years here. And it's the same thing with AI now. I mean, the cat's out of the bag on OpenAI and ChatGPT subscriptions. The only thing that the CIO really has visibility and control over at this point is any kind of enterprise applications that are being developed using AI. And for that matter, I think that most CIOs are pretty positive about it. They're hoping that they can find the right applications to enable chatbots to, for example, interact with customers on their website or to search their enterprise data sets with RAG. And I think that a lot of those projects are getting up to speed, and maybe that's really what's being talked about here. But yeah, I think that organizations are spending a lot more on AI than they know.
John, are you seeing the same thing in your travels out there? Because it's not clear to me who's driving these AI projects. Is it small little groups within a business unit, or is it the IT team?
I think it's maturing. I mean, a couple of things. I'm not that smart, but I get to hang out with smart people. But I know a fair amount of quants to my relationship with Pacific Crest and Key Bank. But they seem to tell me that there's going to be a tsunami of spend in the fourth quarter of this year, just because basically what you've had is centralized budget control for quite a while now. I mean, we talk about the drunken decade we had where we were just spending insanely. Right. And then all of a sudden, within the sort of post or mid-COVID years, we got into like centralized budgeting. Even CIOs, for most things that they had complete freedom, had to go through sort of CFO. And I hear that there's going to be sort of a tsunami again. I don't know this. I'm just listening to what other people are telling me. But I think there is a lot of interesting things going. I love the PC example, because I think it's very similar to the cloud. I agree that cloud was a smaller footprint in an organization, but like this shadow thing that we've been dealing with ever since I've been involved in this industry, which is a long time, right? I think the PC one is a better analogy than even the sort of shadow IT of cloud, but they're all similar, right? Like people have accessibility to technology. They can't wait on centralized control. Centralized control is trying to figure out what's the best way to do this. Well, they're like, I need to do it now. The only other thing I'll add is we recently wrote a paper called Autonomous AI in the Enterprise. It was originally going to be called Dear CIO, which was a bunch of DevOps people, original DevOps folk that would like sort of a letter to the CIO, hey, be careful here. Proxying out a chief AI officer and then proxying out all the infrastructure and technology that comes with all this stuff. Because at the end of the day, AI is actually really a small footprint of all the technology it takes to run AI. I mean, if you look at every massive AI technology stack that I've been seeing or you see in a blueprint, you can count on your fingers the things that are really directly AI related. Most of it's Kubernetes, Kafka, Redis, relational databases. It's a massive infrastructure. Our biggest fear is that you have a shadow IT infrastructure problem where chief AI officers are going to go out and build out things. And we're already seeing some of the vulnerabilities with the SaaSes already, like the Hugging Face vulnerabilities with infected models, where I think they're throwing up infrastructure and not doing their ABCs in terms of things we all know on this panel need to be done to run infrastructure.
This is a really interesting point because the truly massive investments almost have to happen on an industry or an institutional basis from service providers. I mean, one of my little hobby horses lately is there is no such thing as an AI application. There are AI services or whatever you want to call them, but an AI, what gets called an AI application, even like a chat, is really a chat application with AI as an essential element of it. And so when you're thinking about an enterprise context, to begin with, you can incorporate services that are externally hosted, AI services that are externally hosted. You have this data sovereignty and protection issue. So the RAG or tuning side of it, and the inference side of it may be something that you host yourself, but you're not talking about the infrastructure footprint for that you're talking about for training. So as pervasive as it is, I think John is really right that you don't necessarily have to provide that high level of investment to take advantage. But then on the third hand, what's triggering my thinking about the parallel with the PC era is back in the PC revolution era, people were buying these systems that they didn't even know how to use. And I think we've already seen a lot of that as AI spending ramps up, people doing things like buying $10,000 GPUs that then sit, in storage for a year because they actually didn't know how to use it. They just wanted to make sure to have it.
Yeah, we just recorded 2 podcasts on the Tech Field Day podcast, 2 in a row that kind of go together. The second one just published this morning. The first one was called AI is Just a Fad, and the second one called AI is Not a Fad. The AI is just a fad goes to your point right there, Guy, where essentially the thing that we're hearing about AI right now is these building out these massive GPU clusters and AI training and as much electricity as Indiana and things like that. That's the fad. It's not a fad in that it's completely useless. It's a fad in that that's what everybody was talking about. But the second half of that, AI is not a fad. Well, it's the rest of what you're talking about. Essentially, we're going to get real with this, and we are actually starting to get real with this right now. We're seeing real productive applications coming to market. We're seeing applications that use local inferencing on lower powered hardware that are integrated with applications. And again, to your point, AI is not the application, unless maybe you're Anthropic or OpenAI. Then I guess it is the end application, but to basically everyone listening to this, AI is not the application, AI is the tool. And AI is a feature of the tool that allows you to do things that you couldn't do until we had large language models or, generative, image creation or whatever it is that you're using that tool to be. And I think that's where AI gets real. And that's where AI is not a fad. Because truly, there are a lot of really productive applications for this that don't burn down the rainforest and require a supercomputer that costs $1 billion.
And Stephen, it's funny. I keep thinking, where is this debate? And I think you just gave me some clarity. I mean, the fad, when people started looking, is it working? The fad is, people conflate training and inference. Enterprises are doing way more inference than they are training, in my experience. Yeah, more and more. That's right. And even sort of the commodity parts of training. I mean, hell, when I can train a model, that's without a GPU, or really, it's not training; it's an improved model, right? But without a GPU, right? That's telling you this has gone complete commodity. But the big guys are going to still do massive training. The Anthropics, the Gemini, the OpenAI, right? The Microsoft, list them all out, right? And there's going to be massive spend to keep up with the massive inference. So I think there's something in that. The fad might be the misunderstanding of where all these GPUs. How come people aren't buying as many GPUs in the certain segments that we think they are? When the truth of the matter is, it's equal, right? We've got enterprises and large corporations and even startups doing massive amount of inference if you're not in the business of providing models. But the infrastructure somewhere has to keep up. But you're not seeing modern day chat bots or audit products or email campaigns, or just list on and on all the things people are doing interesting with Gen AI. Though you're not seeing those as being massive GPU farms.
I wonder though.
I think there's a game afoot here, and I've seen this game before. The CFO is telling the CIO to reprioritize spending to drive these AI projects, but not to fund other things. So certain other projects may starve because of AI. And then secondarily, the CIO is sitting there going, well, what do I need to fund versus what can I push off on those business units, and essentially treat their budget as their budget by kind of just saying, all right, well, if you want this, Mr. Business Unit Leader, you have to fund it. And that becomes this ongoing game that's been going on in IT budgets for years, and it's now just playing out in AI. I know, Guy, I think you've seen this story before.
Well, yeah, so I was just, reflecting on whether in the data that Forrester and the other firms are starting to use to forecast for next year, I mean, they're using survey data. They're speaking to and surveying these budget holders and IT leaders and so forth. And implicit in this conversation is whether or not those folks are sort of have matured in their thinking and in their understanding of where these AI budgets and other budgets would come from and what they would be used for. They may still be in the sort of hypey mode, many of them, of we need to grab these resources now before, like the GPUs in particular, before they are no longer available. And to your point, Mike, they may also be saying my budget may not be changing, but the overall spend may be changing because of the way we are pushing them out into other business units. The overall supervision of all this, I mean, this is where FinOps came from, more or less, was started with cloud and sort of expanded out to try and get a hold of and an understanding of where all the investment is, no matter where the investment is coming from, how it's being used, and managing all of it. The striking thing about the Forrester report is, unlike a lot of these reports, it really doesn't talk about trade-offs so much. It says budgets are going to be flat on a real basis, rise at the same pace of inflation, and everybody's going to have to invest in talent, modernization, and AI. The only thing they don't mention is increasing investment in security. Otherwise, it's like so many of these reports of the past. Everything has to go up, and yet somehow it's going to wind up stable. I don't know how else you can explain it, Mike, other than, what you're talking about, a kind of shell game approach.
And there's another lesson learned here that we need to get in, right? Everybody thought when everybody went to the cloud, we just reduced our technical debt, right? And it was equal to the on-prem technical debt. Mm-hmm. And so right. It's the same thing that's happening. And I gave a presentation and I showed Bedrock. Nothing bad or nothing good or positive against Bedrock. I happen to like it. But I showed a picture of the infrastructure there. There's a lot of moving parts, and not all of them are AI. I mean, so again, just because you're moving your AI to the cloud, right? And like, okay, now training and all the sort of GPU is all their problem. You still have a large technical debt. And so I think we keep falling into these same traps. Oh, when we go to cloud, we're not going to need operations or infrastructure people anymore. And then we find out, oh, we did. It's actually equally as expensive from a technical debt perspective. Now, it's the same thing. If you look at the infrastructures that people are building in the cloud, these are complex componentries and infrastructure that just don't go away because they're in somebody else's infrastructure.
All right, folks. Well, I'm sure we're going to be talking about this topic again, especially with our folks over at Futurum there. We'll be doing their research for 2025. But right now, it's a scramble out there as usual. It's that time of year. And if you want funding for something in 2025, now's the time to speak up. We'll be back in a minute. All right, folks, we're back, and we're going to continue this conversation about AI a little bit because, well, John Willis has been out in the field talking to some folks about what the actual level of adoption is, because right now there's confusion. Wall Street seems to be banging up on companies for not generating enough AI revenue, and yet when you go talk to folks out there, it seems like that's all they're working on. John, walk us through what you found.
Yeah, I'm going to give you a little history lesson here. Around 2014, there was this interesting debate about whether the enterprise would use DevOps. And not so much Wall Street, because there wasn't really a Wall Street topic yet, but certainly the large providers, the big three, big five, whatever they were at that time, were all saying this will never work in the enterprise. It can't happen. You kids are cute, but patting us on the head, it'll only work in Silicon Valley. And Gene Kim ran a conference called the DevOps Enterprise Summit. And I was on the selection committee, and some of my friends would argue online with all these people that work for the large service providers, and I saw Target, I saw Nordstrom, Disney, I saw Homeland Security, and we gave that conference and we put that to bed. I mean, we had Target, we had ING, the list is Disney, we had UK, one of the UK sort of government agencies, which a 1,000-year-old agency, was doing DevOps, right? Gene Kim would always be. Well, I've been tracking this sort of Wall Street and some analysts, will be saying that like the enterprise is failing. It's the $600 billion mistake. It's the, all this stuff. And I've been in the field. I spend a lot of time with large clients, and that's not what I've been seeing. And so point one is that a lot of these companies are not telling Wall Street what they're doing until they have it. It's a competitive advantage. If you're in workspace automation, then your number one competitor's Workday, you don't want to tell them what you're up to. So there's not a lot. In fact, I've been given like special NDAs not to talk about their AI work, right? Anyway, so Gene Kim renamed this conference to the Enterprise Technology Leadership Summit, which is the old DevOps Enterprise Summit. And I told Gene, I thought that it was in Vegas last week, and on Wednesday was the AI day. And I thought, for those of you who know the DevOps history, right, it was the 10 deploys a day at Flickr, which sort of changed everything, right? Like that, like we can do stuff. And then we had our conference where we showed that Target, ING, banks, healthcare, border protection could do DevOps. We're doing DevOps. Well, this is what Wednesday was. Wednesday, first company up is Vanguard. Vanguard just showing unbelievable. They built something called Audit GPT. They're turning over their auditors. I mean, this is real stuff. Because I'll tell you what, if you've ever been to Gene's conference, these are real people. Gene says there's no velvet rope. People are real, honest, and like what you see on stage are real people working. And so Vanguard goes through their whole thing about productivity. But the one that blew me away was Adidas. Fernando Cornego has been, if you follow him, he's been building digital. He's VP of digital transformation at Adidas, and he's been doing it 5-6 years, revolutionizing them. He gets up on stage, and he's a no crap guy, and he starts talking about 81% less time searching for technology. He talks about 65% complete repetitive tasks, just across the board, 79 to 80% more pull requests. Just numbers. These are real numbers that are happening. Now, you're not seeing these on Wall Street. And in Cisco, John Rouser gets up and he makes a statement that a 1% increase of productivity at a company like Cisco is huge. So when Wall Street's looking for NVIDIA's run rate and calculating it and seeing what the stock price and then panicking when it dips, right? What they're not seeing is these companies are talking across the board. Adidas, John Deere, tractor company, is telling me how they're, and it's the same thing we heard back in 2014. It wasn't like, hey, this is glorious, everything's a win, there's no problem, this is beautiful. It's like, one step forward, 2 steps back, 1 step forward, 3 steps forward. There are lots of hard problems, but the thing that you have to take away, whether it's 80% or 1%, these are in massively scalable companies. Adobe has been in this for a couple of years now. They built a structure of data classification, so that you were seeing a maturity, right? The same thing we saw in cloud. I remember when I go into a company and ask them to cloud, the first question I ask them, do you have a data classification strategy? And if they looked at me like a deer in the headlight, I knew they had no clue what they were doing. Because that's the first thing you had to do if you were going to implement cloud in a place like in Nike or where the data is incredibly important. Michael Jordan's contract is really important, right? And Adobe's got a very mature data classification. They've got a matrix to include privacy, legal, and security. So again, of course, Google, talking about their technology advances, just across the board. The companies like IBM doing full. Again, IBM is IBM, but they're doing full company Gen AI hackathons. Adobe's doing a hackathon once a week. So this idea that it isn't happening, it might not be happening the way Wall Street wants it to happen or views it to happen, but it's nonsense to say, my footprint isn't huge like most of you guys. You guys spend much more time with large group, but my footprint is pretty strong because when I sit and have conversations with real people that are usually 3 from the CIO or 2 from the CIO that tell me the real things they're doing. And so, I kind of want to, like the DevOps thing, where there was a debate whether DevOps was going to happen or not in the enterprise. I feel like what Gene did, and when the videos come out and people can watch these, I think it's going to be that kind of moment where it's happening. Now, whether it's going to be a train wreck or it's going to break or we got security concerns, and there's a lot of dragons out there. But to say that it's not happening is just nonsense.
Well, what do you think about it? Guy, let me go to you because you've been tracking research for a long time. But who told Wall Street that they were going to be driving AI revenues in this quarter or that quarter when it does seem to me it's a long haul and we may not see it as some sort of, overwhelming tsunami as much as it is just a steady flood over time?
Well, I lived in New York for many years. I even worked in financial services way back, and I can't tell you who tells Wall Street all of this kind of stuff, honestly. So let me just start with that. I think, though, that follow the money is well, usually you're talking about doing investigation work and auditing and stuff, but that's really how the Wall Street mentality and culture and ways of thinking come into being. And there is a huge push towards investment in any form of AI or AI as an industry. And so I think that's the origin of that kind of a story, really. It's folks that the street trusts, either because of track record or because of background, who are not practitioners, because that's what John's talking about. I mean, how many times have we gone into these shops and looked at what they're doing and asked about what they're doing and seen a disconnect between what the market is saying is happening and marketers and vendors, and especially folks hawking stocks, hawking investment opportunities. There's a huge disconnect between that and the reality. The thread of truth that runs through it is really the main difference is time window. The main difference is time window. This is a real market problem in general, which is how do you get investment for something now that's really not going to pay off for 5 years when you're up against other investment possibilities that are certain to pay off in a year? Well, one way you do it is by promising results in a year. That's my best analysis of where this would come from. In research, you call it response bias, that people's background and their agendas affect how they report what's happening and what they're doing. And I think we just have a disconnect in background and agendas. Financial people trying to do good work to bring in investment and support for fast development of AI because the benefits are obvious, have to, kind of explain things in a certain way to other non-technical people. And then that gives the practitioners the ability and the space to actually get stuff done.
So when it comes to these questions, though, I think there's another point too. So certainly, Guy, I agree with you that, and with John, that there's a time frame question here. And in some ways, the AI revolution is not really compatible with Wall Street's time frame constraints, because Wall Street really wants to see next quarter or the quarter after that as the time frame when things pay off. Well, they won't. And there's been an essay that's been running around in Silicon Valley, the AI's $200 billion question by David Kahn, just updated by Sequoia to the $600 billion question, because the truth is that essentially at the rate that we've purchased already, GPUs and other AI training related infrastructure, that needs to have that kind of revenue in order to pay it back. But where are we going to add $600 billion to the economy directly attributable to those GPUs? Well, we aren't. That's the point. We are just not. And theoretically, these companies could come back and say, well, hang on, we really are going to add $600 billion to the economy once we use these models that we've created for practical purposes. And honestly, I think that's underestimating it. In my mind, long term, the value of these models is going to be trillions of dollars. It really is going to have a payback. The problem is the dollars spent on that are already sunk by companies who probably won't see those $1 trillion coming back because the old models are already passé. You've got companies like Meta out there making open source models. Frankly, the companies that are really raking in the bucks on AI right now are the ones that are using open source models to deliver value to their customers, their paying customers. And those companies are just cleaning up. Those companies are making this money, and those companies probably will answer the $600 billion question. The problem is it's a longer time frame, it's a different company, and that's just not what Wall Street wants to see when it sees this kind of dollar investment going into capital equipment.
Well, Stephen, you've been doing it. I know you've all been doing this a long time, but like these questions, I mean, that sort of $200 billion and $600 billion AI question stuff, right? I mean, they're looking at the cost, the NVIDIA, right? They're really doing run rate calculations against NVIDIA. I wonder if you went back, and I'm certain you could, and I'm not going to, you went back to early day clouds and trying to predict the infrastructure costs that Amazon was building going into this massive cloud run. Right? Somebody could have done that same article, like, yeah, hey, look at all the servers that are getting bought by, from whoever they were buying, mostly white box, but a lot, Dell and all the Amazon spend on infrastructure. And I remember a lot of these, like, well, is Amazon really going to make any money in this cloud thing, right? But oh my goodness, the net effect of what happened. And so I think it's the same thing. I think it's a miscalculation, a misunderstanding. And the other thing I think is really hilarious, right? You got the Sequoia paper basically just tracking run rates of NVIDIA, right? And there's, again, I'm not a financial person, but I look at the run rates. So I went back and I looked at the run rates from like 23, 24. They're all about the same. So I don't know exactly where they're taking their calculation from, But the other thing that sort of like drives me nuts is at the core of all this $600 billion mistake thing, you have this Jim Covello at Goldman Sachs talking about a project they did that didn't pan out. Well, Goldman Sachs, like, that's sort of speaking out of two sides of your mouth, because I think like Goldman Sachs probably 8-9 years ago probably had 1,000 day traders, 3,000 day traders. And guess what they used to take that down to like 50 or 30? It wasn't called Gen AI, but it was AI, right? Like today, you don't have these houses have like thousands of day traders, right? They do algo trading. It was all AI based stuff, right? And so for them to sort of like say that this is a failure because we tried to do some human investment with AI and it didn't work, and we found a 6-to-1 failure. Look at your history, your own history of the productivity gains. And by the way, who's buying the most GPUs out there right now? It's the big three, and it's the big, it's the Goldman Sachs, it's the JP Morgan, it's the financial institutions, right? So, all right.
It seems to me though that a lot of these companies can do something like resize a workforce and claim AI victory almost in advance. We expect AI to increase our productivity by X amount, so we're cutting our marketing staff by 600 or something like that.
They're being real cautious on that, though. They're like that. They're lessons learned on that, right? Like anyway, so they're being reasonably cautious about. They are doing that. But they're being
I'm just saying, like this, it could be a self-fulfilling prophecy in that sense. Our view, or at least my view, is very much from the practitioner's standpoint, which is to say, to begin with, are we coding faster or are we coding more thanks to these kinds of accelerative tools like AI, but also that can extend out to all the productivity measures we've been using since the birth of MIS back whenever, which is how much more are we accomplishing with, we're our staff across the entire organization, not IT staff, you understand, our entire employee base increased by 5% over the last 3 years, but our productivity increased by 10% as, whatever. And then we can go and say, well, some of that's because of our IT investment. And in this case, if you just replace IT with AI, It's kind of like we can do the same thing. We can go and just say, well, our employee base was stable, or we cut 10,000 jobs, but thanks to AI, we're making more money than ever. So it becomes self-fulfilling without that kind of chain of causation that, as from a practitioner point of view, we want to see. We're just going to claim victory and keep going.
All right, folks, we got to end this conversation here, but one thing we can say, even though I am not a Wall Street person, is pretty sure that anytime somebody is promoting some sort of stock somewhere, in about 6 months, they're going to short it. It just seems to be the natural game of things. We'll be back in a minute.
Discover Techstrong Group, the epicenter of tech innovation. We're your go-to for reaching IT leaders and practitioners worldwide. Our secret? Impactful content that sparks awareness, engagement, and top-quality leads. With us, you'll access editorial websites, streaming videos, virtual events, custom content, analyst research, and more. Join our satisfied clients. Let's revolutionize your tech journey. Contact us today and tell your story to the world in the most powerful way with Techstrong Group.
All right, folks, and we're back with our final block of the day, and we're talking about this movement to pull data out of these SaaS applications and put it somewhere else, because it turns out, well, the bad guys are targeting all the SaaS application providers, aka what we saw with CDK Global, and it paralyzed a large segment of the automotive industry. And now people are waking up saying, hey, maybe I don't want my data shared in the same spot with everybody else. Stephen, are we going to see a lot of this data migration stuff?
I don't think so. I think it's just too compelling. We certainly heard the same thing about the migration from mainframe to open systems. We heard the same thing when about cloud. We're spending too much on cloud. Are we spending less on cloud today than we were 20 years ago? It's ridiculous. No, we're going to use SaaS. I think that there is a real story here. And it came out in some of these interviews that Techstrong has published over the last few weeks here, talking about the third-party risks of SaaS with Brad Hibbert, securing SaaS platforms, and then finally the discussion with Haiku that Alan did. In all of those cases, what you heard was that SaaS is, number one, extremely compelling to companies, and that, number two, they really jumped in with both feet in terms of moving and adopting SaaS applications during the pandemic and afterward. And number three, most companies are using way more SaaS than they know. Specifically, one of the things that my good friend Sabias said to Alan in that Haiku interview is, he talks to a CIO and says, how many SaaS applications are you using? The guy says 4 or 5, whatever. In 5 minutes, he's like, oh, well, we're using this and we're using that. We're using this other one. We're using this other one. Pretty soon they're up to 15 or 20. And those are just the ones that he can think of in 5 minutes. We recently had a situation like that with our company where, the company's trying to get an understanding, not to reduce data usage, but just to sort of standardize and streamline so that we only have one Zoom account instead of 50. And they went out and asked people just within the Futurum Group, what are you using for SaaS? The answer was over 50 different SaaSes. And I'm not shocked at all by that, because at least 30 of those were mine. And so, that's just the world that we live in. I don't think we're going to be able to repatriate. I think we got to take a realistic view of it. We got to look at things that can do data protection of SaaS applications. We've got to get real, which is, again, one of the points that came up in these Techstrong videos as well about securing SaaS data. We got to get real about keeping passkeys and two-factor authentication and not sharing passwords and basically approaching this as another enterprise tool instead of saying, well, the SaaS company is going to take care of it, because they ain't going to take care of it. And we have a great deal of risk if we're basically opening all these things to anyone to access.
Well, the subtle thing that's going on there in some of these cases is people aren't throwing out the baby with the bathwater. They're saying, I want to keep the SaaS application, but I just want to store the data on my own S3 bucket somewhere, and I don't want to use that shared resource that's the target for the bad guys. I don't know how heavy a lift that is, because, and I'll ask John this, but early in my career, if you were moving data, nothing good happened, right? You were spending money, you created security issues, and you probably were introducing errors. So is data migration easier these days?
You asking me that?
Yeah.
No, it never has. It never will. Yeah, I mean, that is always the conundrum. I mean, it is the debate of whether I do on-prem or SaaS, or do I take the risk mitigation, all that. So yeah, now data, where your data is located has been, probably the biggest problem or discussion point. The only other thing I want to talk about, and not that every conversation has to go back to CrowdStrike, but I think I love when you're talking about, Stephen, about like how CIOs, you ask them, how many SaaS, they say 4, and then like next thing, what about that one? Oh yeah, that one too. Like they have no clue, right? And this goes back to shadow IT. But the biggest thing is this too big to fail problem is something somebody in the industry needs to figure out, right? Like what are these SaaS components or infrastructures that when they fail, they fail, like across the board, right? And I don't think anybody's really taking a hard look at what are the SaaSes that are so pervasive in organizations and how well are they managed? And, and again, not that we need another governing board, but I mean, we saw, what we saw at CrowdStrike was a great example, of these technologies. Like everybody, like, can we at least identify the ones that everyone has? And put a better, sort of microscope on those companies.
Guy, what do you think? I mean, is it feasible? Will somebody show up from the audit side and say, regardless of how hard it is, we need to make sure that our data is available?
Well, I think there's 3 issues. The availability, or let's say performance side of it, because you always want the data next to the application if you possibly can. And so you've already created a networking connectivity bandwidth problem by housing it somewhere else, wherever it's housed, under your desk or in a data center or in S3, like you say. So that's one issue. Another issue is continuity, or disaster recovery, backup, all that sort of thing. That's inherent in SaaS. Now you got to manage it yourself, or someone else is managing it for you. That's creating an operational problem. And then the third issue is security. You're either handling security or you're trusting someone else to handle security and access. If all you're doing, for example, is tiering it so that you can go and hug your data when you need to, but it's being duplicated, it's proximal, it's next to the application and all that stuff, is it being protected by the SaaS vendor? And this is where my ignorance comes in. I would ask Stephen and John or you, to what degree are there standards that the SaaS companies can adopt and attest to and be compliant with, such that you can say to yourself, well, maybe it's housed over here, but there are legal attestations, to get back to your original framing of this, Mike. There are legal ways in which we're protected anyway, because the vendor, the SaaS vendor, has adhered to a common standard. I don't know that such standards exist. Maybe there's a need for them.
Yeah, Mike, it's interesting because you talked about that in a couple of these videos, specifically the question of standards. And also you brought up one of the things that you didn't really dive into and is the effects of the Chevron decision. You brought that up, Mike. I'm curious what you think of those 2 questions from Guy.
Well, when I look at it, I would say that, there's too much data in all these SaaS apps everywhere, so I need to consolidate that at some level. A lot of these SaaS apps have now grown in capabilities, so things that I bought for a different function are now features in a different SaaS app, so I think there's an opportunity to consolidate all that stuff. And then it's a question of trust in my mind around the provider. So I might have more confidence in, say, one SaaS application provider than I do in another, because they have the resources to invest the level of security that I need. If I don't have confidence in that, then maybe I will migrate that data to somewhere else, or at least have a backup copy of it somewhere that I can get to in case they do get attacked. Because if they're encrypted, I don't want to be completely out of business. And I don't think it's a good excuse to say as a CIO, oh, I'm sorry, we couldn't process this application anymore because our SaaS application provider was hit by ransomware. You're supposed to know that. You're supposed to be aware of that and make provisions for that. And that's part of the job. And when you signed on to take it, that was the responsibility that went with it. So I think everybody needs to kind of come back and say, what is our methodology going to be to ensure that we're still able to process transactions? And I feel like post-COVID, everybody kind of went out and bought these SaaS apps. A lot of business unit leaders did it, as we talked about before. And nobody seems to have a handle on how we're managing all that data, and bad things are going to happen because, as noted in the article, cybercriminals now look at those SaaS apps as a giant honeypot. They're like, these things are great.
I mean, you know, if you look at a bank, right, like how they deliver software is highly regulated, right? I mean, the OCA, I mean, you got a bit there, you get shut down. Like, you know, it's one of the few industries where you literally, no matter what, you know, like if somehow you are irresponsible with somebody's system of record data in a bank, you're no longer a bank, right? These SaaSes, so, like, I go back to the too big to fail. There's nobody putting, you know, like you look at healthcare, you look at insurance, they all have regulatory control on how they deliver software. I've been in a lot of these SaaSes. I mean, most of them don't even have, not that CI/CD is the answer to everything, but they don't even have, they don't have minimal maturity in terms of how they deliver software. So when we see these massive breaches with these companies, they're on nobody's radar. Again, if you a certain asset holding in a bank, you are going to be controlled, you know, like the audit, the OCC, FDIC. I mean, the regulatory controls at you. But there are these companies now that literally can take out the whole country. And there's nobody that even looks at them from a governing body. Like, how are they delivering? You know, the things that would be like you would go to jail if you're a CIO in a bank for some of the things that like the practitioners or the owners of these SaaS companies are doing. And they are too big to fail. They do, you know, again, I hate that everything has to go back to a recent CrowdStrike, but I mean, that was a massive infrastructure failure.
So maybe, Guy, does the government need to come around and look at various SaaS application providers and deem them critical infrastructure and apply a different set of rules and methodology to them?
Oh, heck no, please. No. Please, no. It's an interesting question. It puts PCI in mind to me, because what's HIPAA? HIPAA is PCI tailored for, you know, healthcare. Is there something that already exists that, you know, so I guess what your question is, Mike, is like, you know, can the market correct itself with some kind of movement so that enterprises know that they're not liable or less liable if they're using compliant, whether it's PCI or some other kind of compliant, you know, badged, attested SaaS. And I think where your question, we could take it seriously, is there government intervention required, is, oh my God, like, it doesn't just start with how many SaaS applications and the fact that a lot of them aren't even known, but how they interact with each other. They're not all used on their own. Many of them are part of networks. They're connected with Zapier or other, you know, similar integration tools. The data can travel. That's why the reason for my strong reaction. That sounds like an impossible task, and just let's dig on the pig.
I don't know, gentlemen, we're running out of time here, but I would say that the threat of that would be good enough to maybe get some people to behave better. And the fact that somebody's going to come and kind of take some sort of analysis of that and apply a different set of rules seems to work in other industries. We have regulated industries, and to John's point, in banking, they behave better because there are rules and regs. So
the question,
it needs to be a regulated function, maybe. It's a regulated function. Sorry.
No, the question is, are you critical infrastructure? And that's the thing I think nobody looks at. You know, people look at water supply, they look at all these other industries. They're not looking at what is the new age of critical infrastructure. And I think it's just not being addressed. And I'm not a big fan of regulatory control, but I think when it's critical infrastructure, for the common good, it has to be.
All right. I'm in Las Vegas. I got $20 that says we'll be talking about this conversation again real soon. All right, folks. Hey, thanks everybody for participating. And I want to thank you all for watching the latest episode. And please stay tuned. We have some awesome content on Techstrong TV followed up. Until then, we'll see you tomorrow.